Henry Cohen achieved what many investors dream of, 191% portfolio growth in just 6 months and an extraordinary 3,500% gain on a single investment. Now behind these numbers lies a story of personal struggle. As a consultant, Henry spent over £350,000 caring for his beloved wife during her 2-year battle with a rare aggressive form of dementia.
That cost a lot of money, virtually all of our savings, because towards the end, in the last 6 months, she needed 24/7 care, which meant nurses and round-the-clock carers.
Those years were filled with sleepless nights and constant financial worry. The turning point came 5 years ago when his wife passed and a friend convinced Henry to attend our stock market masterclass. With no investing experience, zero, he took a leap of faith and joined Investment Mastery.
I had no experience whatsoever of investing or trading, absolutely zero. So I came with an open mind.
Well, the results were life-changing. Within a few years, Henry not only recovered the $350,000, he surpassed it, and he completely transformed his financial future. He now calls that masterclass the best event I ever attended. His journey from profound loss to financial independence shows what is possible with the right strategy and support.
And if you think about it, why would you not want to do that? You know, everybody says, I'd like to be richer, I'd like to have more money. Well, here is the perfect opportunity to do so, and it doesn't have to be complicated, and it doesn't have to take a lot of time.
So Henry, take me through your journey, your financial journey, before meeting us.
So before meeting you, Mary-Louise and I are happily married, 2 very successful careers. We had a large investment in Aviva, and our largest asset was our home. And I did no investing. I didn't know anything about financial management, and we thought we were in a good place. So I knew nothing.
Any financial struggles you've had?
Well, the challenge that I faced was this. Mary-Louise was diagnosed with a very rare and aggressive form of dementia, which took her in 2 years from diagnosis to her passing. And you know what it's like. You make marriage vows and you say in sickness and in health. And I thought it was appropriate that I should look after her as best we could. I looked at care homes, particularly nursing homes, because of her condition, and it was horrid. And we knew that she wouldn't be happy there. So we made a conscious decision to treat her at home.
Who's we, by the way?
That was myself and my daughters.
Okay.
Yeah. But that cost a lot of money, virtually all of our savings, because towards the end, in the last 6 months, she needed 24/7 care, which meant nurses and round-the-clock carers. And unfortunately, we couldn't prevent what was happening because it was untreatable and incurable, and it was always going to be a terminal situation. But I'm glad I did what I did, because I can look at it and say I have no regrets. I gave her the best possible care that was possible.
And so you said all your savings, how much are we talking?
350,000.
350,000?
Yeah.
Wow. Most people don't have that.
No. I was fortunate.
So what was the turning point for you then, that you thought, okay, I need to start investing?
I'd been working and I'd given up work for the last year of her life. In the year of her passing, I spent that whole year traveling because I had to get away. I couldn't face the enormity of what had happened and the grief that came with that. And then in the autumn of that year, the friend said, let's go and do this. It will help you. And so I came along to one of your Saturday events in a hotel in the Barbican.
I remember where you were sitting. You were sitting on the right-hand side, front row?
Yep. Yeah. Absolutely.
Okay.
Because I thought,
very enthusiastic.
Yes. And I asked lots of questions.
Yeah, you should.
And I thought, if I'm going to do this, I want to pay for a VIP seat, because I want to, we talk now about squeezing the lemon. Right?
Yes, that's right.
And I thought,
do it properly. If you're going to do something, do it properly.
Exactly.
So many people come late at the back with their arms, folded, and they're like, this is, why are you here then?
Exactly.
It's ridiculous.
Exactly.
There are a lot of scams out there, though. You do have to be careful.
And I came along my thoughts were quite cynical. I thought it's another get-rich-quick scheme. They're going to tell me about, if you do this, if you pay us loads of money, then we'll give you this, and it will be vaporware. But I have to say, Marcus, I've seen a lot of presentations in my time, a lot of presenters, and you blew me away. Not just in your presentation skills and your charisma, but also in these strategies that you were talking about and the techniques and the way to make money. And I thought, this makes sense. It was logical. Yes. And it was exciting.
Yeah.
And so towards the end of the day, when you said, and if you're interested, sign up for our workshop, there's only a few places, and I was first in the queue.
Those were the days where we used to do it physically.
Yes.
It's very different now, but the strategies are the same because they work. What's really interesting is that, the way we do things and the way we market it is just a reflection of who we are, which is, it's not very sexy, but it works.
It works, absolutely.
Yeah, but it's just not very sexy,
Doesn't matter.
There's no like Porsches and Ferraris and stuff like that. So let's look at your early investing journey. I just want to make sure, did you have any experience in stocks or cryptos or anything before?
I had no experience whatsoever of investing or trading, absolutely zero. So I came with an open mind, but no, I'd never got into it before. I'd always been fascinated by it. I'd always been interested in it, but I'd never had the opportunity.
Then why didn't you, if you'd always been fascinated by it?
It's called life.
Is it life, or is it the fact that, is it scary?
Well,
you don't lose money?
It was life, and it was, I'm not sure I'll be good enough because these are professionals who do it. And you know what it's like? You get the investment companies who say, give us your money. We'll look after it.
Yeah.
Because we know what we're doing.
Because we know, you're too stupid.
Yeah.
We know.
And we know how to place the investment. And of course, it's complete nonsense.
It's total nonsense.
Yeah.
And some of these people, I would love to see their portfolios. Because I think some of them don't even invest.
One of the things you said in one of the workshops still chimes with me, because you said, these people are given a target of 4% a year, and they pat themselves on the back when they achieve 4%.
Yeah.
Why is it 4%? Why isn't it 100%?
Yeah.
And then you said, and how would you feel if you could get 3% a month? And I thought, that makes a lot of sense.
It does, but of course, when you start talking about 3% a month, and I don't mean immediately, you have to learn, you have to practice, but they mean like 3% a month, and that's it, they switch off. But you have to aim for that, right? Because you will do things to make that 3% a month, whereas you will do totally different things to make 3% a year.
Correct.
But if you aim for that 3% a year, you'll never get 3% a month. But if you aim for 3% a month, you're definitely making that 3%. I think it's all psychology.
It is psychology. And also, coming to your workshops, you realize that you can do it. You don't need to be an expert to do this. It's so logical and it's so structured that if you just follow the strategy, follow the recipe, you'll make money.
So why don't more people do it?
Human beings and their natures. Some people think, I don't need this. Some people think, I can do this myself. For all of those people, they will never succeed. Because to learn a new skill, you need to go to people who understand the capability and are able to coach you in becoming successful at that skill.
And everybody who drives a car has learnt to drive the car.
Yeah.
And they've all done it through a driving instructor.
Correct.
But that's because it's mandatory. Yeah. Otherwise they wouldn't.
Exactly.
And we'd have a load of accidents because people wouldn't know what they're doing,
exactly.
or reading. So look, let's fast forward to today. Tell us, what are your total profits and what strategies did you use to get those profits?
Okay, so in 5 years, I turned £5,000 that I started with into £450,000 today.
I mean, I would consider that to be very good.
I think I might have done better if I'd actually done a few more things slightly differently.
Okay.
Because when you do the strategies and you realize what success you can gain, you actually want more. You actually want to do it more.
But you have to learn. People talk about compounding.
Yeah.
But I think the learning is a compounding as well.
Yeah, it is. And compounding is key because that's what helped me make the success so quickly. because I kept feeding back the profits into new investments. But you're right, you can't do this overnight. It's not, that was the other thing that appealed to me. It wasn't get rich quick. It was about, with the appropriate focus, dedication, commitment, and rigor, then you will be successful.
You see, that's so interesting, because I have a sneaky suspicion that most people want to hear something which is a bit faster.
Yeah.
I mean, that's 5,000 into 450,000.
Yeah.
I mean, that's pretty fast, isn't it?
In 4 years.
Yeah, and that's just one pillar.
Yeah, exactly.
So well, there's other pillars, but this is just an additional 450,000.
Exactly.
And the other thing, of course, is that's up to now. Now, well, I wonder what's going to happen in the next 5 years.
Yeah. Because, you know, when we had that earlier chat about Warren Buffett and how he converted his fortune in the last few years and doubled it from, I think it was something like,
I think it was 58,000.
Yeah, 58 billion.
Oh, sorry, billion.
Yeah, billion.
Billion.
Yeah,
that's right.
To 110 or something.
109 billion.
Yeah.
In the last 9 years.
Exactly.
That's where he made
Exactly.
the biggest chunk of his money.
Yeah.
I think it's wonderful.
Isn't it?
Yeah.
And the nice thing about it is it makes you smile.
Yeah.
And the other nice thing about it is about being with people who do the same thing and make you smile.
But that means it's never too late.
It's never too late. Not at all. I mean, I'm 76, right? I'm 76, so I started late in my terms.
Okay, compared to maybe some other people. Because if Warren Buffett, who is now retiring at the age of 94, you've still got 29 years.
Exactly.
You've only been doing it for 5.
Yeah, exactly.
Wow, think about that.
Yeah. Another 20 years and
some people at your age would go, oh, I'm never going to learn it because it's too late.
Yeah.
But they're wrong.
Exactly. Or it's too hard, or I'm too old. Never too old to do this. And also, you're never too young to do this.
Yeah.
You know, there's a guy in the club who I met at the members' meeting. Can't remember his name. He's an 18-year-old, and he'd done research into crypto coins. Taylor, that's the guy. And I think 18. Wow. How blessed is he?
So that wouldn't have put you off then? No. If you saw an 18-year-old, you go, oh, now, and people compare themselves.
I don't have a problem with his age. And one of the key things I think about being successful is you want to be competitive, you want to be competitive
with yourself,
but competitive with yourself.
That is so brilliant.
Yeah.
That is so brilliant. Because if you start comparing, it's a losing game. There's always somebody taller, smaller, faster, younger, older. He could have said, oh, Henry, he's older, wiser, I'm 18, right? He could have, and I bet you many people do, and he didn't.
No.
And he's now, I think he's doing his family's money, he's on 330,000 or something. I know. Right. And he's going to come, I've offered him a job, so he's going to come and work it.
Fantastic.
I can't wait.
Even better. Even better, fantastic.
So, but he decided, no, 18 is the right age. You've decided, well, when you started, you were what, 62?
So I started 6 years ago, so I was 70.
6 years ago. Fantastic.
Yeah. So
all right. So which strategy did you use though to get from 5,000? And I want to know everything. I don't blag this, right? So 5,000. But did you put extra money in along the way?
I did.
Yes.
Once I started seeing the results, I started with VCA strategy.
No one does that. You know, they say, oh, you know, I've got 2,000. I want to take it to 1 million. Yeah, okay, but on a monthly basis, could you, or every other month, or once a week, could you put? So how did you do it? Did you put more money in?
Yeah, absolutely.
When?
When I, not immediately, but when I saw the VCA strategy was working, I thought, okay, this is working. The way I can make real money, like big returns, is by putting more in. Because, you know, 10% of 100 is £10. 10% of 100,000 is...
More interesting.
Much more interesting.
10,000 is much more interesting, right?
Yeah, absolutely. And so I knew that by adding, I would make better returns. And therefore, by adding and using compounding, I'd make even better returns.
Absolutely. And I think, you know, no, I get excited by this because I think most people don't realize, I mean, this is really, really foundational stuff, really, that every parent should be teaching.
Yeah, absolutely.
But they don't know it themselves. That's the challenge. It's definitely not taught in school or the governments. So let's go through that again. So So what's important is to keep reinvesting your profits.
Yep.
But the other thing is to now and again add more money in as you see it working.
Absolutely.
Because it makes sense.
Absolutely.
Rob Alders did the same, by the way.
Yeah.
He had certain, so when I make my first 1,000, okay, when I make my first 10,000, and he didn't come to me until he'd made $1 million.
Yeah.
I said to him, why didn't you tell me earlier? He goes, no, I wanted to wait till I make $1 million. I'm like, all right.
He was inspirational for me.
Rob, yeah.
So he started off with 10,000 euros out of his redundancy pay and turned it into 1.5 million.
Yeah, that's right. 1.3 million.
1.3. So if he can do it, I can do it.
Which is what we always say.
Yeah.
If he can do it, you can do it.
Exactly.
If we can do it, you can do it.
And I think it's important to stress that. I don't have any special investing or trading skills. Right? I've just got a brain and I follow the recipe. I follow the strategy and it makes you successful. So I don't understand why people, A, don't want to do that, and B, don't want to follow the strategies, because it will make them money. You have to have rigor, you have to have discipline, and you have to have commitment. But if you do that, you will be successful. And there's so many people in the club who you've interviewed who followed that process and have proven their success.
And I'm sure along the way, you've made some mistakes.
Yes.
It's not just like, 5,000, 10,000, 20,000, 40,000, 80,000, 160,000, 320. Oh, I'm at 400. You made some mistakes, right?
Yeah. I mean, at one point, all of my stocks were underwater. And I thought, why the hell did you do this?
Oh, did you?
Yeah. And I hit the wall. And I thought, I can't. And you're in, a chimp comes out and says, you're not very good at this, are you?
Interesting.
You're going to fail. Just give up and do something else. And what really touched me was when Dennis said in one of the workshops that he stops every year and he recharges his batteries. And then I knew I could carry on.
Honestly, in that interview with Dennis, when he said that, I didn't know that.
Yeah.
That's why I love these interviews. Stuff comes out.
Absolutely.
And he said, at least once a year, sometimes twice a year, he says, I can't trade. Because he has so many losses. He goes, I can't trade. Yeah. But it's just probabilities. It will happen. It will. It's just like a coin. You know, I don't like that because it's a bit gambly-ish. But you don't know what the market is going to do. That's got nothing to do with you. Okay, I've got to ask you though. This is exciting. What has been your most successful trade?
The most successful trade was a trade on the Sol coin, where it was pretty well down below its all-time high. Yeah. And I kept investing in it, and then it recovered, and I made 3,500% on the trade.
Hold on, 3,500. What do we get in the bank? What are you getting at the moment in the bank?
2-3% a year.
And so this wasn't 30 or 300. This was 3,500%. Yeah. Translated, that is, if you put £100 in, it will be worth 3,500. But if you put 1,000 in, that would be 35,000.
Yeah. And so on.
Yeah, if you would, exactly. Well, you would have put more in because you did it as it went down.
Exactly.
All it takes is 1 or 2 trades like that for your entire portfolio. That's another thing most people don't understand.
Correct.
That's all you need. And it's going to happen. And is it luck? Well, it's the market doing its thing, but you knew a strategy to take advantage of that.
And part of the strategy is researching and understanding the coins that you buy or the stocks that you buy, because you're part of it. And if you do the research and you understand the benefit of the coin or the benefit of the particular company you're investing in, then you will make money because you're invested.
How does it feel to really make such, let's face it, amazing returns?
I feel blessed. And the reason I feel blessed is because the universe introduced me to a company that coaches financial education, financial success. And so I was very, very blessed in meeting you guys. It was a turning point.
But thank you, but it's not. You did the work.
Yeah, but you showed me the tools and the techniques of how to do the work. And
but you did it.
Yeah, I know.
It's a symbiotic relationship. That's what I always say at the beginning of the workshop. We're in this together.
Yeah, we are.
Because I used to say we meet you halfway, and then and I've changed that now, which is that we give 100% and you give 100%.
Yeah,
that's the way it is.
Yeah. But it's a great feeling to be successful. and to see your investment pot grow. And the interesting thing was, having turned 5,000 to 450,000 in just this space of time, and I can't remember exactly the percentage increase, but it's in the thousands, right? And my financial advisor, because I still got a lump sum in Aviva, and he said, I've got the results for the last 5 years. And I said, okay, how have I done? And he said, we made 10.5%.
A year?
No, in the 5 years.
Oh.
And I said, and how are you feeling about that? And he said, it's a fantastic result. And I said, it's worse than inflation.
Oh, you asked him, what did he feel about that?
And he said, a fantastic result. I said, no, it's not.
Have you told him your results elsewhere?
I've told him my results, and I've also told him that I will be moving the rest of my portfolio away from that company.
Now, somebody listening to this would say, hold on, what is he doing? You've got to diversify, but you will diversify yourself.
Yeah, exactly. I don't need somebody to do it for me. It doesn't take a huge amount of time each day. I get better results, so why would I entrust it to somebody who's going to be happy with 10% in 5 years? That's appalling.
That's really bad.
I've got less than when I started.
Inflation at one stage was around 10% a year.
Exactly.
So he's actually lost you a lot of money.
Correct. And don't forget the fees and commissions that I had to pay for that privilege.
Absolutely. When I was down in the 90s, 70% on the money I gave to somebody else, they never... Because I'm like, I just can't. Honestly, I really can't. I said, how... But you're this was me on the phone. I couldn't talk. I was like, I was so angry, but I didn't know why, because it's not their fault, because I'm the one that gave them the money, so I had to take responsibility. But why didn't you sell at some stage? And they said to me, but you didn't tell me to sell. And I'm like, what are you talking about?
It's all your fault.
Yes. Yeah. But they didn't ever say, look, we're really sorry we lost you 70%, but we won't take any fees this year. Yeah. No, most of that was fees.
Yeah. and they set a target of maybe 10% a year as their return.
So they'll never achieve more?
They'll never. And they feel happy about that. And I just sit there thinking, really? I can do better than that on my own. Why would I not want to take responsibility?
Okay, so what is somebody thinking right now watching this? They're probably thinking, yes, but that was just over the last... Actually, no, they can't be thinking that, because during the 5 years where this person made 10%, you made a lot more than that, coming into the thousands of percents. So therefore, it isn't just you did it over a certain period of time, and you were lucky.
No,
because
I did it through bear markets and bull markets, right? But I did it following strategies, and that's stood me in great stead. And it's helped me be successful.
I love it. I honestly, I'm not going to say I'm turned on right now, but I'm very close.
Good.
I love it.
Yeah. And it's logical. I don't understand why anybody would not want to take responsibility for their finances and use a tried and trusted method to actually become financially successful. It doesn't make sense in my head.
It doesn't make logical sense.
No.
But emotionally, you can understand why people don't, right? They're scared.
But then if you come and join a group of like-minded people, not just the quality of the coaching and the training, but the membership, they're wonderful people. Yeah. They're there to serve you and support you and help you on your journey. I have never seen anybody say, oh, you haven't done very well. When we have the workshops, when we talk about people's successes, everybody responds to say, well done. We take pleasure in other people's success.
Honk, honk.
Yes, honk, honk. Absolutely.
We'll have to explain that at some stage. Okay, so how do you, right, Henry, stay calm during market downturns?
Right.
How do you do that?
Well, one of the things I've learned is that when you're investing or trading, there should be zero emotion. There's no fear of missing out. There's no upset if I lose an investment or a trade. And there's no feeling of grandeur if I've won one. But when the market is going down, that's when I get excited. Because we invest as the market is going down. And the revelation, the light bulb moment was, oh, you mean when the market's going down, we don't panic? No, we go in, we buy more.
You do the opposite of panicking.
Exactly.
Like it's not just even don't panic, it's the opposite.
It's get happy.
Get happy and get in and buy some more. Now, somebody watching this is going to go, whoa, 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 whoa. So you're just doing what's called the martingale system. 100, 200, 400, and then it goes to zero and you've lost everything. They do this in casinos.
All right.
Are we talking about that?
No, we're not.
No.
We're talking about researching a stock or a coin, because why would you invest in something you don't believe in or you don't know anything about? And you're choosing coins or stocks that aren't going to go to zero, and you're going in and watching the price going down, because you know the market is cyclical. And the price will go up.
Okay, but this is where people will probably say, yeah, but how do you just said cyclical, but how do you know it's going to go back up? You don't know that.
But it must go back up.
Why?
Because there are sellers and buyers. And it's a constant flux between people selling and people buying, which is why when we see a stock or a coin being sold, we know that there isn't enough appetite to buy it. But guess what? There are hundreds of millions of people in the world looking at the market and going, oh, the price is nice now, I'm going to buy. And then all of a sudden the price goes back up. That's one of the beautiful things I've learned through investment mastery about how the market works.
No, but I love that as well. But don't you think there are some people right now that say, look, I like you, Henry, you seem like a nice guy. You don't have like a 10-year-old or a teenager on here. So you obviously know, you're not an idiot. You know what you're doing. I'm not saying 10-year-olds are idiots, but you don't know that it's going to go back up. You don't know that.
I do.
You do?
Yes, absolutely. I know, but that's where patience comes in.
Yeah.
And not panicking, because at some point in time, the market will recover.
But okay, the market might recover, but what about that particular stock?
Can't guarantee an individual stock will recover, but that's part of, sometimes you win your investment, sometimes you don't.
And it's okay that sometimes, so there are losses in there as well?
Yes, of course. You can't make profits all the time. And also...
that's okay?
Because one of the great benefits about making a loss is you look at what you did wrong and you learn from it.
And sometimes you didn't do anything wrong, it's just the market.
Sometimes, but then you might have done something wrong in that it's just the market.
It's just the market.
And the only way you get better is by making mistakes and learning.
And the other thing is to make sure that you don't put all your eggs into one basket.
Correct.
And people have heard this.
Correct.
But they still go into... So, for example, let's just say that you are going to diversify.
Yeah.
How would you diversify?
Well, I tend to do a combination of looking at the state of the economy. So at the moment, everybody's into risk-off assets, which means assets that are not risky, that are stable, that aren't going to be hugely volatile, but are steady and strong. And therefore, when the market recovers, they'll recover first. So I tend to look at what the market's doing, whether I'm into being risk-on, in other words, more risky investments, or whether I'm being more conservative and less of a risk profile. And that way, it's a constant dynamic of managing your aspirations and your risk profile with what the market's doing.
Yeah, but now somebody listening would go, okay, so gosh, that sounded like, this guy, this is 5 years now, right? This is
from knowing nothing.
Right. But so, therefore, do I need to know all of this because that sounded really complex and I'm just a father, I'm just a mother, I'm just a housewife, I'm just a teacher, I'm just a...
Number one, it's not complex. But number two, you don't get it overnight. You get it by sticking at it and by learning.
Yeah, but you can, because, you've got a suit on and you look like you can.
Yeah.
Like, can I?
Yeah. Can you tell me that in your day you can't spare half an hour? Even half an hour a week?
Yeah, if I had to.
Yeah. Yeah. So you've got 7 days. You must be able to find half an hour a week. And when I first started in investing in stocks, that's all it took me, half an hour a week, because I'd chosen my investments and I was just watching the price. And that was it. It was that easy.
Yeah, it is very simple. People
and then you
realize.
learn, and over time you become more and more knowledgeable and you can do different strategies. And then it sort of like compounds, a bit like the calculator.
Tell me, talking about mindset and psychology,
Yeah.
tell me like something that's very important or a key, something that you learned from us at Investment Mastery around that.
I think one of the things that you said in one of the workshops is that 80% of the success is mindset. And that is absolutely right. And for me, mindset is three things. First of all, it's not having any emotion. Secondly, it's having the rigor, dedication and commitment to sticking at this. And thirdly, it's about approaching the whole aspect of investment and trading in a mindset that will say, I am prepared to succeed at this, because there's always opportunities.
I love that. So let's go through that. So what was number one?
Number one was about not having any emotion.
Okay, that's easy for you. All right, okay.
No, it's not.
No, but you're saying no, something's just dropped 30%. My money that these guys said was, I'm going to teach you how to make money. And my 1,000 or whatever it is now only worth 700.
Yeah.
How do I not get emotional about that?
Because if you get emotional, right, then you can't make the right decision.
Too late, I'm already emotional.
Well, then you have to go and get a cup of coffee, leave your desk, go for a walk, and just think about it.
And that's what the club is there for as well, to jump on a course. I mean, we have them almost every day.
Exactly. And there's always people there to help.
And I needed that when I first started. Would you think I was just like really calm? No, I had my own mentor who, and I was like, yes. He just repeated the same thing again and again. It wasn't anything different, but I needed to hear it.
Exactly.
Oh.
And I remember one of the members posted a very big return on the Sui coin, which I hadn't gone into. And my immediate reaction was, rats, I missed it. And then I thought, hold on a second, there are always opportunities. I didn't get that one, but there'll be others that I will get.
Yes, and also, how come I missed this one? Right. So maybe where did you find that one? Oh, in the Telegram. Maybe I didn't look in the Telegram group. Oh, I need to look in the Telegram. So there's a learning there.
Yeah, there's a learning. And there's always knowledge to be shared and to learn from. So that's a key.
Talking of knowledge sharing, what is something that you'd like to share with somebody listening?
What I'd like to share is, if you get into this and you keep it simple, start with the VCA, and just do a few stocks and get into that investment and start to get results, then your whole life will change. And if you think about it, why would you not want to do that? Everybody says, I'd like to be richer, I'd like to have more money. Well, here is the perfect opportunity to do so, and it doesn't have to be complicated, and it doesn't have to take a lot of time. So my mindset goes, just do it and try it. And then enjoy it, and be surrounded by hundreds of members who also want you to be successful.
Thank you. What's your top advice for someone with no investing experience and maybe even has financial challenges? What would be your top advice?
My advice would be to start small, keep it simple, and just learn. And every time you make some profit, find some more money to put in, and then grow your portfolio and use compounding, and you'll be amazed within a couple of years how much you've got.
That is really good advice. That is really good advice.
Thank you.
Thank you, Henry Cohen.